All right, everybody, welcome to another OkieTradez Study Session. And today is a really good one. Pretty proud of myself for this one. And I know a couple of other traders in the Small Cap Rocket chat room this morning also took the trade, had a good trade off of it. So that always warms my heart. But I do want to talk about OTRK here. And ironically, that this stock was kind of my top watch last night, which I also pointed out on the last study session. Which I don't know. Sometimes I might. I'm so far I'm getting lucky. Like if I notice the stock will be a good watch, and the study session for the next day tends to be the best runner. Although I did find it on my nightly watch list scanner, and yeah. So overall, today was a great day. I was staring two max red day uh, losing days in a row. So you know, the question was, do I size down and try to protect myself like I typically do after sizing up and taking big losses? And I decided that this time, I've been in the game for so long that I realized that every time I size back down, well, I always you know, crawl right back out of the hole, and the same thing would happen if I just keep a level head with the big size. And so do what I would do with the small size. And I realize when I trade small, a lot of times I don't even bother with stuff because it's just a waste of my time, unless I expect it to be a setup that, is going to work really well. So I decided, you know what, we're just going to stick it out, stick to the big size. And today, right off the bat, OTRK, I knew it was going to be either a big winner or a big loser. And again, if it was a big loser, I really would have been stressing about do I keep size or not going into the next day. But thankfully, OTRK, obviously, you can see here, was a really good winner. And I basically played it as good as you can do in my eyes. So, what do we have here? We have a multi day breakout. So, this is, in my eyes, kind of like day one. And then this would be day two, day three. I didn't think it would be a day three surge because for one, the volume kind of dropped off too much, but it this day closed a little bit too far away for me, from this high. So after this day right here, yesterday, after it had a strong green day and closed up strong near this high, I knew that today it was most likely, if it could gap up or at least not gap down on a first high of day break, it was going to try to push over this high. So this is the multi-day breakout of 48.5, and I figured over 0.485, it's going to want to test this multi-week breakout at 0.62, 62. So not only did it test it, but it broke it. Honestly, I was hoping that it wouldn't break it. I was hoping it would stay under 62, and then tomorrow we could have had another breakout. But it's actually, since it like kind of closed up around the highs, technically tomorrow it could kind of play out the same way that it did today. But it would be like a variation that I haven't really ever played, so I'm not sure if I would want to take max size, and if I'm not taking max size, I'm not sure I want to trade at all. Because you can, in this market, lose 20 times in a row. Believe it or not, you might think that you'd luck into at least one win out of three or four, but no, you can easily lose 10, 20 times in a row. So there's no point in my eyes taking any trades that I don't take max size on. Now, the stair stepper pattern is a special setup where small size gets you a huge victory because you're adding to a winner and moving your stop up. So it's kind of like a rare thing where even small accounts get to taste what it's like to have a really big victory. But obviously the stair steppers have been slowing down and haven't seen really any for the last couple of days. So, it's probably over with. And like I told people, the stair stepper setup is kind of a setup that only lasts January, February, March. So, yeah, so we had this day where it closed up really strong, and I knew today that it was likely going to break out over these highs, which I already explained. So let's get into the intraday action. And as you can see on this breakout level, I'm drawing there, it actually gapped up over it and then couldn't hold it and slightly closed down. And this is the multi-week breakout right here. We'll draw a line there too, just to make it simple for everybody to see. But as you can see, it gaps up, tries to hold above the breakout, and it can't. So I'm thinking, okay, this is going to be juicy, especially if it can do a hive day just underneath it. Usually that's the best ones. But I've been learning to adapt to these ones that have been gapping over the breakout. If they hold, just seems like they're going to work. And they have been. And honestly, if it's going to keep working, then I'm going to keep adapting. So, but it's not something that like I learn right off the bat where stocks gap up over a breakout. In the beginning, I wouldn't trade those, but now I'm full go max size on those too. I just consider it like a variation, like, you know, day three surge or multi week breakout. Anyway, so how do I approach my entries on these? Anytime I'm looking for a multi day breakout and I know that it's very close to the breakout level, my goal is always to buy first high a day break. Now, what is my risk? My risk is either low of day, but if low of day is too far away, then last best dip. And that should be clear to you. So, I see the stock spike up through the breakout, right? And then it pulls back, but then it instantly spikes back up. I'm potentially about to buy it over here over 50, risking 47. But it stuffs. And now I'm getting even more excited because the longer it takes, the more confident I am in it. And that just should be for anybody, obviously. But it breaks right there. And yes, I was ready for it. And I hit 51. I wanted to get in at 50, but I tried to buy it at 50 and I hit 51 and I barely got filled there. And I got filled all my size, but at the very last second, 51. And then it instantly stuffs. And I have huge size, so I'm not risking low a day. It's too far away, so I'm risking the last best dip, which is 48. So first high of day, 50 break, last best dip, 48. So I was risking 2 cents, but with slippage, I got 3 cents risk. And I'm kind of nervous because it pulled back really hard. Oh my goodness, now it went underneath the best entry. So that's really not ideal. And again, I'm staring at 2 red days, potentially 3 max red days in a row. But I'm sticking with Psy. And it holds, it holds, it holds, it holds. It's holding. The longer it holds, the longer it holds up weak, the more confident I am. And notice the volume staying pretty strong. Boom. Breakthrough. Now, technically, this is a stair stepper, but I'm not adding to it like a stair stepper. Why? I didn't want to jinx it for one, which is a pretty crappy reason. But two, we haven't really been seeing stair steppers work the last few days, so I didn't want the market makers. They were trying to shake me out right here, but then once they realize I'm not going to get shook, they're going, right? Well, If I would have added here, they probably would have tried to shake me again. So I just wanted them to not think about shaking me at all. I just wanted it to go smooth. But if it was a stair stepper, I could have added here, and obviously we're cooking now. So once we get this nice, I always pretty much sell a third after we get a push and then the next push. So once we stalled out right here, I sold pieces like 5.8, 5.8, not 5, something like that. And it's pulling back, holding up really strong, holding up. My new risk is right here at 49. Some people might risk here, and you know, maybe that is something I look at, but I need something to be a little bit longer of a consolidation to give me trust in the dip to risk off of. But now, like this consolidation is building up long enough that I'm telling people in the chat, if we break high a day, which possibly could be a good ad spot if you're stair stepping it, which I'm not going to explain for the millionth time and should stop. But again, if we get over high of day, I'm moving my stop up to here because clearly this is consolidated long enough, just like this area right here. And as we get through high day, I'm moving up my stop. But since we got up so close to the multi-day breakout level, I sold another third. So I've sold 1/3 here, 1/3 here. So now I'm out roughly, I'd say, what is that, 70% of my shares, 75%. But it's holding up. I'm thinking, oh man, it's going to bust through. It's going to bust through. And then it pulls back hard. After it pulls back really hard, again, my stop is here. I'm thinking the next spike back up to this level, if it stalls out, I'm going to sell the rest. If it spikes through, then I'll look to sell this last third in thirds. So it spikes through, and I'm thinking, all right, sell a third when it stalls out. It starts to stall out right here, so I sell a third there. But then it tanks, so when it comes back up, I sell another third there, but I'm holding my last little, which is basically 1/12 of my original position, to see if it can't go higher. But as you can see, it dumps underneath my stop, and so I cut right there. But I sold, I would say, 90% of my shares up in the very highs. Try not to sell into weakness unless it goes through your stop. Otherwise, sell into strength. So amazing multi-day breakout play, which is a setup that works in every market in my eyes. So setup that I always look to trade, and I will hopefully until the day I die, basically. Versus a stair stepper setup, which is only going to work like January, February, and March, and then the rest of the year you're not going to see it working very often, or at least if it works, it's very sporadic and not enough to, it's not good enough to have your attention on it. All right, now let's look at some low float stocks. What I wanted to do was break down what I'm noticing works with Oracle. So I've been tracking Oracle and how it works. And let's see. Actually, I got it saved right now. Let's look at my screenshot. So I saved Oracle's screenshot alerts this morning, like I do every single day. And I'm looking at the top percentage gainers of the day, and I'm looking at the lowest floats. So, and they got to be underneath 20 million ideally. So the lowest floats, top percentage gainer. So we got a 3 million, a 15, and a 3. So OTRK, IBIO. But anyways, IBIO trigger is 298 via Oracle. So let's just draw a line at 298. All right. Now, why would I choose IBIO over any other stock? Look at how IBIO traded in pre-market. It opened at its highs. I think that's the key. Like, if you're looking at a stock, make sure it's a low float, high volume, gapping up ideally with news, but mainly that it's also opening at the highs of the pre-market action. We don't want to see a stock make a big spike, pull all the way back down, and then spike back up from the lows, and then we mess with it, whatever, or even worse, down at the lows. So we want to see, we need to establish that we're only looking for stocks to trade Oracle's levels if they're trading at the highs of pre-market action at the open. All right, so now we see it actually does bust through 298, and I tell people I would never buy into a straight up spike. So what do I want to see? I want to see like a high day scenario, and we get it basically like right here, and obviously the risk would be right here. So if you're buying it as it breaks right here, you're having a risk right here. And after it has this hard pull and it comes up and it rejects again, I'm probably cutting it break even just on this one. But that doesn't mean we don't watch it anymore. Now, this is just my own ideas on it. Now, I'm also starting to notice, so like, all right, so other times, right, you might want to buy it straight up. No. So what am I noticing now that's actually even offering better entries? Check this out. So let's make the line 298 is the Oracle entry signal level. Now we see that it goes up to that level, right? And this is kind of the support line. I actually want to find an entry off of support, Oracle support, and then I want to sell into the next Oracle level instead of, and I notice a lot of in the entry, like if, okay, to get a little bit more specific here, if the entry is very tight, so this high day action, imagine it was like this to make it very clear. Imagine it was like this kind of action right here at the open, very tight underneath the Oracle entry level, then I would buy straight on that break, okay? But since the entry is so far away, or I mean, yeah, the entry is so far away from the risk, it's very wide. As it pulls back and it curls off of this, I'm telling you right here, I'm noticing this happening a lot of times. Look at this right there. These tight little curls off of this Oracle level, it's insane. So 247, risking 238, so basically 10 cents, and you get a move up to 317. It's like 75 cents, risking 10 cents, so 7 to 1 right there. And then check this out. Now, once we've broken through resistance and we curl off of it, you can also, I'm telling you, this little curl, let me zoom in. So it slips under, but then reclaims, and then this curl right here. So you can buy it right there, 321, and then risking 307 basically. So a little bit wider, but then you get this nice move, and then, you know, obviously if you don't sell into that move up, you're going to have to cut it as it pulls down. Still though, right? But it's not breaking down. Comes back down, test it, hold. You could catch that curl again. But say you didn't want to do the curl. Well, there's also stuff like this. I'm noticing that's working well, which also kind of worked here, right? Little wedges underneath high of day. So here's a high of day, and a wedge underneath above the support on a low floater. So high of day, above support, underneath high of day, wedge. Yeah. And this applies only to the top gapper as far as like these oracle lines go, in my opinion, like right now, that's what I'm focusing on. I've got a lot of that show me like this is kind of what I want to be looking at. So if you're wondering how to use oracle, this is how I'm starting to notice how to use it. But I also wanted to look at some wedges, and I noticed something here which is really slick. So it's kind of like a head and shoulder scenario, right? And I mean, it's not perfect, but what I'm noticing is, and we can just look at it like this, underneath high of day, like we said earlier, if there's, so we get this move up, and then it pulls back, holds VWAP, and you get a clean wedge like this. Oh my goodness. And look at this volume wedge too. If you get that volume wedge with a clean wedge on a low float on a stock that just made a big move and it pulls back and holds VWAP, that's a go. That's a full official go for me right now. And then check this out. It does it again. Same stock. So makes a big move. We've got an established high of day. Now we get the clean wedge. I mean, you can look at it like this, or even better, look at it like this, or even better, you can look at it like this. I mean, however, okay, so let's just move this one up right there. Yeah, there we go. That's what I meant. So the line clearly able to be drawn. Wedge underneath high of day. You get the nice move. And I'm also noticing it's kind of giving you like a nice trend line to work off of. Same thing. So there is that. And just to make my point here, right? We have a high of day, and then it pulls back, and we get this beautiful wedge. Well, let's zoom in here so you can really see it. Right? So shows us the strength, gives us a high of day, pulls back, then we get this mini wedge underneath high of day. I mean, it just doesn't get much cleaner than that. And then look, volume wedge goes right with it. Big victory. And it's holding that trend line. Bust off of that trend line right there. And then obviously that's where you sell it. But it couldn't happen again, could it? Nah, I don't think it could. Oh, wait, it does. Spikes up, gives us an established high of day. Where's our mini wedge? Where is it? Can y'all tell me? We'll let the volume show you. There's this one. Can we do better? I think we can. Goodness. Look at that. I mean, that's just money. So these mini wedges underneath high day after curl with the volume wedge to go with it. I mean, that is just, and these are low floats. So, I mean, there's just too much to go off of, too much to give us a heads up right here. CGC, we also went over this one, and we talked about it in the last session, like weed's been hot, and then, if you see this one move, you're probably going to see ACB move, and so we saw it make a move. Just kind of want to go over this quickly here. Like, what was the best entry on this? We're just waiting for the cleanest, clearest entry, right? And obviously, it's pretty much right here. I'm not saying you buy this. No. I'm saying at the same time, you want to buy ACB once this one gives you the ultimate entry or ultimate confirmation it's going to work. So you get this huge spike up. So at 116 is the time. Down here, see the time? 116. So on ACB, same kind of setup. Let's go to the 1 day. What did it do at 116? Right here. There's your entry. Whoops. And even if you're a little bit late, obviously there's your entry and you're just still risking down here. And then just the way CGC closed up very strong and it's telling you you need to swing it. It's basically telling you the same thing here. And I'm probably betting tomorrow there's going to be a big move on both ACB and CGC, barring bad news. But you instead of swinging the whole thing, you want to sell some into the close, protect, and then you can safely swing some. That's the idea. All right, well, this was a really awesome study session here, and I hope everyone takes full advantage of it. And again, if you have questions, just hit me up in Small Cap Rockets chat room. All right, everybody, take it easy.